Welcome everyone. Hope you're having a fantastic Thursday evening. Welcome to the Thursday night Bitcoin Live macro market analysis stream with Empire. My name is Matt. I'm one of the head coaches here at Empire Cryptocurrency Trading. Very excited to jump into the charts tonight with everything that's been going on in the last couple of weeks with all the war across the world and how the markets have just bounced so violently. I think everyone's looking for a bit of clarity, and if you're worried about what's going to happen next, if you want to know really how to navigate these turbulent times and how to make the most out of the market from what you have, then it's here, it's now. And I'm going to show you over the next 10 minutes. You're going to get everything you need to be able to trade these markets effectively over the next couple of weeks and how to navigate some of the moves that are going to come. So stick around. Going to give you guys a little bit of time to filter on in, and in the meantime I'll just tell you a little bit about what I do at Empire, and that is harmonic pattern trading. So I look at the lens of the market through harmonic patterns. I use M and W shaped structures called harmonic patterns that are wave patterns built on Fibonacci ratios, and these patterns allow you to see cyclical turning points in the market. And they're really effective when you couple them with regular technical analysis and you layer it on top of simple concepts like support and resistance, like trend lines, like market structure, oscillators, and you combine that with sort of bigger market theories like Dow theory and Wyckoff and sort of ideas around accumulation and distribution signatures. You put all this stuff together and you get a pretty clear idea about what an opportunity is in the market, where the levels are that you want to target for those opportunities, and all in all, how to sort of manage those swings that you see in the market over and over again. It's been really effective for me, and I hope over these sessions you guys can get a little bit of a taste of that, how I view the markets and really how to effectively trade them with these patterns. And if you want to know more, it's going to be on Empire where you go to find that. So stick around if you want to hear more about that. But for now, let's jump into the charts, hey? Alrighty. So we're going to start on coin. We're going to start on the NASDAQ. So the NASDAQ has had a violent V-shaped recovery, trading at all-time highs, and it's sort of changed the paradigm of this market, where as crazy as things may seem and people will be calling for shorts left, right and center, I think this V-shaped recovery is very, very similar to what we got last year when we had all the tariffing lows, and then suddenly, no, it's all good, we don't care about tariffs, and we roared to all-time highs. This has the makings of that all over it, and for me that means we go for another 1618 expansion. If you want to know why, it's essentially what we did last time. So if you plot your fibs from high to low, you can see our 1618 was where we topped out at and went sideways for a while. The thing that has caught my eye and just has me thinking about where this can go is the fact we didn't even get a 382 retracement off this entire trend, and that tells me that the trend is still overwhelmingly bullish. And I think it's a good environment right now to speculate on a lot of different bullish plays in the market, because when you're at all-time highs, liquidity is expanding, and more importantly, market breadth is expanding. What I mean by that is some of your low floaters, some of your lesser than setup that maybe wouldn't have been that effective as far as entering them for trades during this period where we kind of were just trying around. They're going to be catching bids now. They're going to get those moves that you want them to have. So I think there's a lot of things that I've looked at, a few really critical setups that I've shared with the guys at Empire today as far as some sort of macro market plays. But when I look at Coinbase, this tells me everything I need to know about crypto. And if you go back to last week's session, you'll see that we talked about Coinbase as kind of your make or break chart for crypto. It said a lot about what could happen in the crypto market. The reason for that is you had a bullish bat harmonic, this M structure here. It's a bullish wave structure that if it is successful, you should do a 382 retracement of that entire structure. So drawing your fibs from high to low should go to about that 260 level. For that to happen, you have to do some constructive price action at the lows. So what we were looking at last week, and really for the last couple of weeks, is this 175 level, because that is the defining level of this wave structure, this 886 retracement that you see down here. So if we just pop our fibs on the pattern, 886 through to that 175, 176 level, and that essentially marks the support or resistance for the harmonic. When we're below it, things aren't good. When we're above it, things are very good. And we should be targeting those 382 levels. So for now, we've defended that level successfully. So my thoughts is you're more likely than not going to that harmonic target. And the reason why we've got Goku and Vegeta up here in a bit of a beam struggle is because of the battle that's going on at this level. Just realizing I made my chart a little bit too small for you guys. Let me fix that up. There we go. We're definitely on the training wheels as far as the streaming goes, but week by week we get better. We got the soundbar going now. If you want to hear how the stream might be going, you could say get out, or you could say
very bad, boys. Very bad.
The reason we have Goku and Vegeta up here is because of the battle that's been going on at that 165, 175 level. Now that we're sort of moving our way up, you should be expecting that 250 sort of level to get hit on the 382 retracement of that harmonic structure. Goku's winning the battle. He's saving crypto, he's saving Earth. So good job. Micro strategy. Let's take a look. So the MicroStrategy chart has a very similar harmonic. It's probably clearer on the daily. Actually, let's just go to the 2-day. That's a bit nicer. You had this Gartley harmonic and you were below the level at 154. And while you were below there, you couldn't really expect anything big for crypto. But for the most recent couple of bars on the 2-day, you've seen a breakout of that XA level. And that confirms this harmonic. So you're now expecting a run to about 270 on this. And I think when you look at the Coinbase and you look at the MicroStrategy chart and you say, okay, well, Coinbase targeting 275, MicroStrategy targeting 275, Coinbase targeting 260. If we reverse engineer that, what does that look like for crypto? And arguably you could say much higher, right? So we sort of paint our analysis on Bitcoin through that lens. And as we sort of shift over to the Bitcoin chart, you can see that we are sort of in this channel. It's probably clearer on the daily. So you can see we've had a breakout at that 73.8 level. This is the level we highlighted last week. You go back in time and sort of see the significance of that level, and you can see it was an all-time high, and then it capped us as resistance for some time, and then when we broke out from it, we went on a pretty historic run to all-time highs. So now that we're back above that level, there is a very real possibility that we could go really, I think, as high as that 382 retracement around 84, 85K. So we're retracing this downtrend, right, from all-time high down to here. And a 382 retracement would plot you at about 85K. There's definitely some things to be cautious of as we're at this level. And I say cautious in a way that, things are pretty good right now. You're above the level, but just be mindful that you're probably at the first kind of level where you would consider this to be on the lookout to roll over in this channel. So obviously you're hitting the supply line of the channel, that's one thing, but then also you have hit the CME gap. So if you look at the CME futures, you'll see that there was a 4-hour gap that we left back in sort of January, where generally your gaps get filled. Historically, most gaps will get filled, and we've done a partial fill of that. So for me, that was kind of your first area that you would be targeting for this move. And then if you can clear that, it's probably that 382 retracement that we just looked at. So they're the two kind of levels on Bitcoin that I'm looking at. I think it's helpful to consider this move as a retracement of the larger downtrend. But for now, while you're above 73.8 and until you get probably two like red candles in the daily, I think it's probably okay to just say this is fine, and in time we'd expect it to go a little bit higher. I think the fact that you got a partial fill on the CME futures is probably a sign to say maybe you go for one more tag higher before you go lower. So we'll see what happens there. And then moving on to Ethereum. So we've had this big daily structure, this BAT, which sort of marked the low around 2000, and we shared a trade setup. This is what we shared with the team at Empire for a move to about 2900 off this harmonic. We've got Michael Scott. I'm ready to get hurt again here because you were getting hurt a lot trying to long Ethereum in the downtrend, and it's just sort of been a running joke with the team. But I think if you were opening fresh longs at 2400, which is your first trade target of this move, you are Michael Scott. You're ready to get hurt again, right? It's not a place for fresh longs. You're at resistance. The place for fresh longs was where we shared them, right? On the 4-hour, you are up against it with this bearish shark harmonic, this W shape here. This is a bearish structure. It marks resistance around 2400. Until you break this level here, it's hard to say you're going higher. I think the trend is definitely strong and bullish and all of that. And you've done constructive things on the daily, so I think there's a very real possibility you break this and you keep going to that level, but you haven't done it yet, right? It's not confirmed by any means. So I think, definitely not a place for fresh long positions when you're a bit elevated off the zone. It's not an equitable area for a long trader in this sort of spot where we trade right now. Alrighty, we'll cover the semiconductor index, the SOX index, because I think it just has to be looked at. This was something that we were well ahead of at Empire. We covered this down at the lows of this channel back at the start of April. And what a crazy run it's had since then. There's been a few plays that we've sort of talked about amongst the team. Marvel was one. And then we had Microchip, which is still building, and a few others that have looked really good. We're just on a massive run, and I think this is very indicative of a bubble that we're in right now, that you are seeing mass AI infrastructure getting built. You're seeing all of this technology coming out around AI, and you need the chips. You need those chips, man. So we'll see what happens there. But very, very strong. I think it sort of warrants some Halo Jesus chimes here. Bask in the glory of the SOX index. There's been a few plays obviously mixed up in this that we've talked about. Gonna not talk about them here, just in the interest of time, and also in the interest of sort of keeping the value a bit more centered on our Empire platform. But there's a lot going on in the SOX index. Another area I want to talk about is uranium. So if we look at the uranium charts, we call it the absolute low on this, the freaking low, like to the dollar, to the day on this one. So you saw the low down here at 32. You can see we pivoted off that. The area this targeted was based off this harmonic here and this harmonic here, back-to-back M-shaped structures, back-to-back bullish structures. And for people in the know of how harmonics move, it's generally an initial move, a reaction, and then you come back and you retest, and then on that retest you expect a larger, more pronounced move, a reversal play, and yeah, you're here, right? And we picked this one perfectly down at 32, and you can see where this this is looking. You're really thinking about a 1618 expansion now. To around 84 would be my thoughts on, this is Euro, this is the 2x ETF of uranium, but look at really any uranium chart right now and they show this bullish constructive action and it looks really good. So a lot to sort of garner there on the uranium side of things. Things looking really good. Something I've spoken about with the crew at Empire and also just on my socials is corn. You look at how corn has moved in historical times where oil has been really strong, and you'll see they share a large correlation. You also sort of draw some of the inflationary inputs of everything that's happening geopolitically. Look at what things pass through the Hormuz Straits. Obviously there is a lot of oil, there's also a lot of nitrogen, and nitrogen is used in all these fertilizers that these crops need, especially corn and soybeans, and these factors I think will come into play. And just slowly building, like you contrast all of that on the technical side of things, and got a big weekly bullish harmonic and a back-to-back sort of smaller harmonic at the zone. Love to see that, just like building and just sort of curling up here. I think sort of accumulation signature being painted with 3 rising valleys, sort of expecting that next move to come sooner rather than later now. So yeah, there's a lot to sink your teeth into, really. I haven't even scratched the surface of it, to be honest with you. There's so much that is moving and really poised for big moves at the moment. If you want to see more of those plays, if you want to sort of really get close to the source of what I'm looking at, you're going to have to come see it on Empire. So make sure you click the link in the video description and check it all out, and check out what we're cooking at Empire, because it tastes pretty darn good. But besides that, I think we'll love you and leave you there. I think it's been a nice little 20-minute odd stream. Hope you got everything that you need to sort of navigate the markets in the near term, and we'll be back next week to do it all again. Have a great weekend, and I will see you guys around, and we'll just sort of on the way out hit you with let's go alt that day.
500 cigarettes.
On that note, we'll see you guys later.